Hi, good morning. This is John Caruso coming to you here from May 18th with your currency outlook for the day. First, we'll take a look at some of the broader indexes. The S&P 500 right now is trading down about 5 points, flat to lower on the week overall. It's been a really quiet week for the equity space. We're trading roughly around 27.14 right now. From what I've heard, I believe there's some back and forth with China and the United States as far as trade talks. And the last word we heard was talks were starting to break down again. So that's got investors a little bit edgy here to start the session. Not much other than that as far as economic news here today. We did see earlier in the week retail sales 0.3% versus a prior reading of 0.6%. I don't think it's any secret that quarter one consumer spending was slower than expected. The outlook for quarter two is moderate at best. Let's jump into the currencies right now. Looking at the U.S. dollar, bullish trend. Trade 93.66, making another new high for the week today, up 28.5 points. We are immediate term overbought. We are bullish on the U.S. dollar, but that doesn't necessarily mean you run out and you buy the U.S. dollar here today. We are bullish the U.S. dollar at a specific price. That specific price would be probably back towards the low end of our range, which comes in around 92 or so. So bullish on the USD on pullbacks. What's driving the U.S. dollar right now? I think it's plain as day. It's inflation expectations, and you've got the 10-year yield interest rates also hitting a 7-year high this week as well. We did see the 10-year yield push to 3.13%, which is a level we haven't seen since 2011. So right now you got the U.S. dollar and interest rates chasing inflation expectations. Naturally, we've seen crude oil prices make multi-year highs this week as well. So I think that's pretty obvious. Inversely, the U.S. dollar, the euro currency, right now 117.81 down, and we believe we have downside to about 117. The market is immediate term oversold, so be cautious right now, taking a short position on the euro versus the U.S. dollar. Poor economic data in Europe since the beginning of the year. They are in a growth decelerating and inflation decelerating environment, so that kind of keeps the bears in charge of the euro trade to the downside. The other currency I want to talk about just briefly, the Australian dollar, trading under 75 this morning. I do think this is kind of a value. I think we're at a value point in the Australian dollar versus the USD. We did see strong employment numbers out of Australia at the beginning of this week. And we also do expect to see upward wage pressures as the months go on, and that should leave the Reserve Bank of Australia on a hawkish slant as far as raising interest rates. So the Australian dollar could be a good value at present levels. So keep that in mind. That's all I have for you this morning. Once again, I'm John Caruso. Feel free to reach out by phone or email. Thanks.